Hello, this is Red Time Mortgage Guy. Now, are you an investor or are you interested in buying an investment property? But let's say your income is not high enough to qualify for the purchase of the investment property. When we, for example, if you apply for a conventional loan, for an FHA loan, for a VA USDA loan, you would need to show tax returns, pay stuff, right? The financial documentation. But if you are not able to qualify using full docs, right, program, then I suggest you to consider using our DSCR program, which DSCR stands for Debt Service Coverage Ratio. So this program is designed specifically for buying investment property, okay? And we don't require your tax return, your employment information, personal income information. We basically just look at the property you're interested in buying, and we would order an appraisal on the property. And usually, ideally, if your market rent can cover the PITIA, which stands for principal, interest, tax, insurance, and HOA, okay? And if the market rent can cover that, then you get better rate. But we don't require the market rent to cover the PITIA in order for you to qualify. If it cannot cover, then we still can do a loan for you. I mean, the rate is probably about quarter higher, but that's not bad, right? Because with the high interest rate nowadays, it's very hard for the market rent to cover your mortgage payment, the PITIA. Okay, so definitely, give us a call if you are interested in buying and you cannot qualify using full docs type of loan program, conventional, FHA, VA, USDA. All right, so it's a very easy, straightforward program, and the rates are generally maybe 1 to 2% higher than your conventional loan. Okay, which is not bad because we obviously you're not looking at documentation, so the investors gotta have a way to make money, right? I mean, they cannot sell the loan to Fannie Mae, Freddie Mac, so they have to keep these loans, and the only way for them to make money is to charge slightly higher rates, and maybe 1 or 2 points. Okay, but again, this is not for everybody, but for investors who need to buy a property, this would be a perfect program for them. And generally speaking, we only require about 20 to 25% down. Okay, the more you put down, the better rate. And they usually this program also comes with prepayment terms, usually from 0, no prepayment, to 5 years. The longer the longer the prepayment term, the better the rate you get. All right, but on average, I would recommend maybe 2 to 3 years, because you don't want to keep yourself locked in a prepayment term for too long, because in the next probably 2 to 3 years you should be able to refinance your lower rate, and you don't want to be locked up with a prepayment term when you have to refinance. Okay, so again, hopefully this helps. Kind of trigger some interest in your, if you have been thinking about investing in property but cannot qualify for your traditional loan. All right, so give me a call, 626-627-4289. If you have any questions, feel free to leave a comment.